Welcome to this explainer. Today, we're diving into the massive and, frankly, kind of complex Indian banking system. Now, instead of looking at it as some dry list of institutions, we're going to explore it as one highly organized, living ecosystem. Literally every rupee you earn, save, or spend flows through this intricate network. From the vast urban centers down to the smallest rural villages, banking in India is the vital infrastructure driving all our economic and social development. When you step back and really look at the sheer scale of billions of transactions happening every single second across this country, it's genuinely awe-inspiring. So buckle up because we're going straight to the heart of how your money moves.
Okay, take a look at this map. I know it looks huge, but trust me, it's far from chaotic. Every single type of bank, whether we're talking about a commercial bank, a cooperative bank, or a specialized development bank, has a very specific, absolutely vital role to play in the larger financial food chain. They are all interconnected branches growing from the exact same regulatory roots. Getting a grip on this map is the key to understanding how a nation of over 1 billion people actually manages its wealth, funds its businesses, and plans for the future.
To make sense of the whole shebang, we're going to take a structured, fast-paced tour through 5 distinct zones: the central bank, commercial banks, cooperative banks, specialized engines, and finally, the niche banking revolution.
All right, let's kick things off with Zone 1, the apex boss, the central bank.
Every country has a central bank, right? Well, in India, that ultimate authority is the Reserve Bank of India, or the RBI. Established way back in 1935, I want you to picture the RBI as this massive, majestic building acting as the literal heart of the economy. Deep inside, there's a giant printing press smoothly rolling out fresh currency notes. And from that central building, imagine these glowing lines of authority and regulation traveling straight out to all the regular neighborhood banks we interact with every single day. It is, without a doubt, the apex boss bank. Now, here's the kicker. The RBI actually doesn't deal with the general public. You can't just stroll in and open a savings account there. No way. Instead, it uses its superpowers on a massive macro scale. It frames the country's entire monetary policy. It holds the exclusive right to issue those currency notes we just visualized. It acts as the official banker to the government itself. But maybe most importantly, it acts as the banker's bank. It keeps all the other commercial and specialized banks in check, ensuring the whole system doesn't just collapse. Stepping down from the apex, we hit Zone 2, everyday giants, our commercial banks.
These are the banks you and I know best. They handle our primary deposits, your fixed and demand deposits, and they're the ones granting loans and advances. If you step onto any busy high street, you're probably going to see 3 very distinct types of branches operating right side by side. On the left, you've got a public sector giant like the State Bank of India. Right in the middle, a private sector powerhouse like HDFC Bank, and over on the right, a foreign bank like HSBC. All around them, regular citizens are just walking in to deposit their hard-earned savings or maybe grab a home loan.
It's a really fascinating structural contrast to see right in your neighborhood. You have these massive public sector banks where the government actually holds the majority of the capital, operating right next door to private sector banks which are owned by groups of individuals. But hey, despite the totally different ownership models, they are both heavily competing to offer you the best agency functions like fund transfers and utility functions like safe deposit lockers and gift checks. Leaving the crowded cities behind, we enter Zone 3, community builders, cooperative banks.
Out here in the semi-urban and rural areas, a totally different structure takes root. Cooperative banks form a literal grassroots pyramid to support local communities. Just picture a glowing green 3-tier pyramid. At the very base, you've got village credit societies giving crucial microloans directly to farmers and local workers. Move up a step to the middle layer, and you find the district central bank, gathering funds and coordinating all those village societies. Finally, sitting at the very top is the state cooperative bank, monitoring the districts and channeling funds downwards. Their primary aim isn't about massive corporate profit. It's all about providing accessible credit to economically backward groups, farmers, and small-scale units.
Now, what if the financial needs are huge and highly specialized? That brings us to Zone 4, specialized engines, development, and more.
Say you're a massive corporation looking to expand a factory. Regular commercial banks might just not be enough. That's exactly where specialized and development banks step in. Imagine a dynamic split screen showing these economic engines at work. On one side, development banks like SIDBI are specifically funding large factory expansions and medium enterprises.
On another side, you've got exchange banks swapping Indian rupees for US dollars right next to giant shipping cargo vessels. And then you have apex institutions like NABARD, completely dedicated to financing agricultural and rural policy. They aren't lending to you and me directly, they fund the institutions that fund the rural economy.
Adding to this specialized mix, we also have regional rural banks, which were established back in 1975. Notice the really unique partnership formula floating right above those small rural artisans? It's a meticulously calculated pie chart. 50% of the capital comes from the central government, 15% from the state government, and 35% from sponsored banks. This highly specific partnership is exactly what ensures rural savings are mobilized efficiently.
Finally, our tour brings us to Zone 5, the niche banking revolution.
This modern revolution lives right inside your smartphone screen. Picture a clean, split-screen banking app UI. On the left side, a small finance bank app, think Jana or AU, is processing a microloan for a small business. They exist specifically to bring financial inclusion to unorganized sectors. Now look at the right side, a payment bank app, like Airtel or Paytm, is zipping through a money remittance transfer. But check out that gentle warning popping up on the screen. No loans allowed, max balance 1 lakh rupees. Payment banks are a brilliant new conceptual model by the RBI built to help low-income people with everyday transactions, completely removing the risk of lending.
And let's be real, absolutely none of this niche banking revolution would be possible without e-banking. Thanks to ATMs, debit cards seamlessly deducting from our accounts, credit cards giving us instant lines of credit, and the total magic of real-time gross settlement systems, or RTGS, transferring huge, life-changing funds across the country in under 2 hours, the ecosystem is now entirely at our fingertips. Mobile banking has literally turned your cell phone into your own private bank branch.
So, as we wrap up this explainer, I really want you to think about the journey we just took. We started at the majestic printing presses of the RBI, moved through the bustling high streets of commercial giants, climbed the grassroots cooperative pyramids, and ended up straight into specialized and digital niche apps. Take a look at your own wallet or your phone right now. Seriously, ask yourself, where does your money currently live within this vast system? And more importantly, who is it working for? Thanks so much for learning with us, and keep exploring.